Well, it looks like in 2012 the euro might be roadkill, but that's maybe just an expectation and not going to be reality. But there's a number of things coming up that indicate that the euro's got some serious bumps coming ahead, speed bumps, and it's weighing in heavily on the metals. Now, I know before, not that I'm Karnak and I know everything that's going to happen, but I know silver got down at about that 26 something. Gold got down at 15 something, I think 15.28 around there, and it bounced. And a lot of people were saying that was right around the same bounce we had back before at the end of December 2011. And they considered, okay, that's it. It hit resistance, it bounced. I wasn't so sure. I was thinking, especially when Bernanke made that announcement about hinting about QE and continuing Operation Twist, everything started exploding. But I wasn't sure. I thought it was a fake out. Right now, I'm still sticking with that stuff. That silver might go solidly below 26. And there's a number of indications that could be that. And the euro looks like it's in a hell of a lot more trouble. It's like roadkill for this year. French banks need to roll over 30% of their total debt in 2012. Spanish and Italian banks need to roll over more than 1/3 of their total debt. In other words, they got to sell it. They got to sell it. Someone's going to buy these bonds. Who's going to buy them? China? German banks need to roll over 40% of their total debt. I don't think that'll be a problem. Irish banks need to roll over almost half of their total debt. But the big question is the Spanish and Italian banks. If there's a lot of problems there, rolling over their debt, there's going to be serious liquidity crunch, and that'll weigh in heavily on the metals. Now, getting on with this Nat Dania chart, not that I put a lot of faith in charts all the way, but I was remarking back here after we had this long descending decline, and you have these 3 weekly bullish hammers down here. That's like your classic tendency that things will go up in reverse. You got 3 weekly bullish hammers after this long decline. That's usually a sign that things are going to go up, but I wasn't sure because I'm not putting too much faith in these kind of technicals other than Fibonacci. But Fibonacci on the long range tells me that silver can very easily go well below 26. And what I'm thinking is the problems in Europe aren't over with. They're going to have to roll over this debt. So, I got cash, and my cash has been going up, and I got enough cash to last me more than a year. See, I don't play that game where just put the whole damn thing in there all of a sudden. I'm waiting for something to really hit bad, then I might go in. And but this is a large drop here this week again, and you can see it on a daily. So a couple more bad news stories about coming out from the euro about their debt, and it could drop even further. We've seen what's happened today. Silver's took an immensely good hit. The S&P actually has not been hit that much. Now, a lot of times I look at this because this really tells you this is basically an S&P index. It follows the S&P. You could buy a stock ticker on the S&P that follows the S&P. It's SPY, but it's a good indication as to what's going on in the S&P. But, something like this is actually something Bernanke would be looking at more than any other thing as far as the silver price, the gold price. They can care less about that type of stuff. But, yeah, they're getting hammered, and all the metals, I'm sure, are getting hammered. And oil is getting hammered, the Dow, the NASDAQ, and everything else. So the dollar's up to 82. But you got to remember, what is actually transacted? What do you make transactions in? U.S. dollars. I mean, you're not being forced to transact in gold and silver. Otherwise, it'd be a run into these metals. It's based upon the U.S. dollar. So, this game is not up yet, but and if it totally falls apart, I don't think, I don't think it's going to fall apart. What I think is going to happen is, this is kind of the key to the whole thing. They're going to have to inject a lot more money into the system. You're not going to get enough buyers for these bonds. They're probably going to have to buy back their own debt or something like that. The government's going to have to buy back the debt. And it's just going to cause them, they're going to have to do a type of QE, quantitative easing throughout the world in central banks in the United States and also in Europe. That's going to keep continuing. That's why the metals are going to go up a lot. So, I'd also like people that when they're talking about Ben Bernanke doing QE and what a jerk he is and how he's making the silver and gold prices go up, let him do it. Don't criticize him. Don't criticize him. Actually, you should send him a thank you note and say, Ben, you're doing a great job. Yeah, we need a little more stimulus in the economy. Things still aren't right yet. Keep your gold and silver. Let it go up. Let it go up. Let it go up. And, maybe start selling in pieces when it really starts getting up there. If you get a double or double and a half, start selling in pieces. But, don't criticize Ben Bernanke too much about things because he's actually the guy that's controlling what's going on with the metals prices more than anything. And I want him to do QE. But right now what's going on is the euro looks like roadkill for the 2012. And that's because of what's coming up. They're going to have to roll over the debt. And it's like, who the hell's going to buy it? Who the hell's going to buy euro bonds? Maybe it's going to be the euro-wide bond or something that's going to happen. But I don't know. There's going to be too many calamities that are going to scare the markets. And it's going to bring silver down more. I'm still maintaining silver's going to go solidly below 26, but it ain't going to go below 20 or 20. It's like, I don't even think it's going to hit 21. I think it's going to go solidly below 26. But you notice how fast things can bounce? It's like, people start thinking QE's coming around the corner. Well, one word out of Bernanke's mouth and the whole damn thing will turn around in 2 seconds flat. Problem is, the silver and gold people very stupidly criticize the guy. Let him do the damn stuff. That's the only thing that's going to get you far ahead of all the other asset classes. And it's unbelievable that they tell this guy all this garbage against him because, if you want him not to do QE, then your gold and silver is not going to. It's going to sit stagnant for a long time. Basically, QE is what's going to make that metal move more than anything. And it devalues the heck out of the dollar and things like that. That's what makes the metals move. People start panicking and out of paper assets and they get into real assets. The average person isn't doing that. But once the average person does that, let them make stupid moves. That's the way I look at it. That would be a smart strategy. So I think what's coming up, the euro's got some more problems coming up here very soon. There's going to be a lot of problems with them rolling over the debt, and like I said, in Spain and Italy. And when that happens, I don't know. There's just going to be a need for liquidity. People are going to run into the dollar. But then that bubble's going to break. And when that bubble breaks, hello gold and silver. They're going to be moving up.